Well, pay attention to this video, guys, because there's a lot of things I want to discuss, and I'm going to just slam everything into this video because I'm not going to have time to come out every day making those videos because this market is given, and we have to make sure that we make the right decisions here. By the way, our public trade, Marathon Digital Holding, which I and you are in, is ready to squeeze out. And you got to make that happen, guys, because it is the power of the people. Option contracts are about to enter. And as you get these call options, well, brokers have to buy shares of this specific stock. Even if the options are for 6 months from now, you don't even have to own the shares for that stock to move, because there's a lot of short interest on it. These shorts will get sweaty and they will have to walk away to take a shower. So this stock is ready for explosion. That's the good news. And I'm up multiple six figures, just like you guys, of course. Some of you have lower averages. But there's always good and bad news to everything. And there's a lot of other growth stocks that are outperforming everything else. But there is alarms being rang, guys, in the markets. And the old heads have came out to talk. Because I'm a realist, right? Well, I'm not just one of those hypers. I am a realist trader. Basically, what you have is old heads telling you they have seen the same kind of markets before. Maybe so. Experience is better than somebody who just entered new. But just like your father, he might be experienced in life. He tells you advice, and that advice works out later on in life. And then you say, yes, he was right. But by that time, if you hadn't taken advantage of what's in between, well, you would have missed out on a lot of opportunities. And that's where we are today, guys. This is the market that we're in. So these guys are not wrong, but they're not. And they know they're early as well in calling it a bubble or dot-com bubble. But all bubbles need a shock to kind of shake that money that's congested in certain trades. And if you look at the dot-com bubble, which is what these guys are saying it is, well, a dot-com bubble, when it burst, gold stocks and gold itself ended up rallying, but Bitcoin wasn't around back then. So we have been positioned in something similar to gold miners, which is a Bitcoin miner. And just like a Bitcoin or gold miner, it benefits when the asset it mines goes up in value, and of course that's Bitcoin. And Bitcoin is the hedge, of course, and we've seen that in 2023 as well when there was fear in the market. Bitcoin ended up gapping up, and it's institutionalized now, so it could be something that really gaps up, and these stocks get to see a lot of money. But this is an undervalued stock with a 18 PE ratio, 17 PE ratio. Comparing it to other growth stocks in the market like quantum computing and AI, and even certain stocks that don't even have a product, and their revenue doesn't make sense. Their expansion, their growth prospects don't make sense, right? They have higher valuation than a stock like this. And that's why being in an undervalued stock is good. Because when the music stops and the bubble bursts, your stock gets to hold a little bit of value, especially if the underlying asset it's mining or holding is not losing value, but instead gaining value. So that gives you a hedge and risk exposure. And that's good. And that's what I've been preparing for with this trade. But let's talk about the good days before the bad days come up. Well, AI critics are thinking too small, says AMD chief. So I might be an AI critic. But the thing is, when you're betting on future prospects and they never show up, well, the critics end up right. And that takes months, maybe years. OpenAI, even this guy says there's a bubble, but he recently decided to go in with 1 trillion, right, investments. So, look, guys, here's what I'm going to say to you. It's starting, baby. Low interest rates, everything is good, dollar is weak, Bitcoin is going to continue higher, everything is going to rocket, and I'm going to become right. And no matter what happens, even if there's a crash, I'm not selling nothing because this is the hedge against everything. Now you know there's other stocks that we're holding. We'll probably end up selling at a decent profit, but you can't tell when a bubble will burst, right? Or when the music stops, or when everybody walks away and goes home. You just can't tell, but you can tell that it's there. And if you just hold back saying, "Oh, there's a bubble here. I'm going to keep short. I'm going to short this now." And the market will do that to you and it will trap you. But guess what you do? You add more fire to the fuel. And the fuel is all these short positions that exist today. And then you're shorting more and you're adding more fire, and then you have to buy back cheaper. And then you realize, "Oh no, I've missed out on this opportunity. Let me go in and buy that stock." Finally. And you buy it by the end, like at the top of when it's ready to go and pull back. But here is the thing. Even after a bubble burst, selected stocks will emerge. And those are the selected stocks that have future prospects. And they've already positioned themselves for what happens when the music stops, as they say, and money stops rolling in. So you have to be prepared for all these scenarios. I've been prepared, guys, and that's why this trade is the trade, right? I mean, what are you gonna do? It's 20 PE ratio. That's undervalued. It's not congested. You guys are the early buyers, right? You guys are the early buyers, and you'll see there's a deal coming in the next 3 months that will change the tune for this stock. And I told you what my price target is, guys, and look at this chart here. This is a straight rally to the $33 mark. Okay, maybe even 38, just kissing 40. That's only 46% gap up. That's nothing, guys. That's nothing. I mean, a 46% gap up, do you know where that puts us? That puts us around 40 PE ratio, 30 to 40 PE ratio. Actually, will put us around 40 PE ratio, which is nothing. It's peanuts, guys. It's peanuts. Given that also the asset that is mining increasing in value, and then there's a deal for future prospects to show the world, hey, we're here to stay even after 2028. Halving. Well, this thing, guys, can go to the $150. But all in time, guys. All in time. All right. Don't say, "Oh, this thing is missing the big rallies," or that. I wouldn't want to put my long-term trades on something that has like 100 PE ratio plus. It's just too risky for me and for you, because when the things collapse, well, what ends up happening really, it takes very long for that price to recover, especially when it's congested and everybody kind of got scared from that trade. But my target for this, guys, you know what my target is. It's $50 plus. But on this candle, we should see hopefully this month, I think we'll see somewhere breaking above $28. Because this rally is very clean. We'll probably just recover to here, 27. And from there, we'll see. That's only 24%. But there's so much short interest on that. So this could really carry on above the $30 mark. And we'll celebrate later on. But you can see in my face, I'm not that excited about it. Because, I'm in for the long term here with this trade. You can always trade the hype if you wanted. And day trade the hype if you wanted. But that's not what I'm here to do. But I'd warn you against that, of course, as well. That's me done, guys. Thank you very much. The next couple of videos will be celebration videos, as I said before. But it depends if we get the right price or not. Peace out, guys. Bye.